All right, Daniel. So when we started this, it was obviously all about ads, and it will be about ads again one day. But given what both of us are in LA, and given what I've experienced over the last month, and that my house burned down, after talking it over with you, we sort of figured, we have this platform that people do subscribe to. We might as well use it as a way to find out about how LA can rebuild better and smarter than before. So if you're listening today expecting this to be about ads, it's not at all. I don't know when it's going to be about ads again. Instead, we're trying to have conversations with people who understand how LA got to this point, how these fires started, and then also how we can rebuild and what are the common sense ways to go forward. And we started sending around DMs to people to see if they were willing to have this conversation, and a lot of people have. So we're going to be doing a bunch of these. Again, we love ads. We just launched Universal Ads the day of the fires. I couldn't be more passionate about what we were covering before, but we're going to take this detour for a while. If you are someone who's trying to listen to an ad tech podcast, I think check out Marketecture, Ad Tech God, Eric Seufert's podcast. I mean, there's some great ones out there. But like I said, for foreseeable future, we're going to be trying to focus on how do you rebuild LA. This week is going to be all about the insurance market, and in particular fire insurance, and how we got to where we are today, and then how going forward that market can be changed to actually make sure that people like myself and yourself actually can be protected. God forbid this happens again.
Yeah. I mean, I love ads, as everyone that's listened knows. But I think this is an important topic, one that is very close to my heart with you and living in LA and knowing so many people impacted. And so I think this is just a really important platform we need to use, and interviews that we're going to be having. So I think this is going to be a great series.
Yeah, didn't see this one on the bingo card, but I guess with that, this is episode 1 of the Taking Inventory, Rebuilding LA series, all about fire insurance. So let's get into it. All right. Well, we're changing the format of Taking Inventory. We didn't think we'd ever get to the point where we'd have to do dedicated episodes about how messed up California and Los Angeles are, but we are. And so the idea is every week we can go on one topic about really kind of how we got here and then what the solutions to this are. And so this week we're really lucky to have Jen Fitzgerald here. She's the co-founder of Policy Genius, knows more about insurance than just about anyone, and actually has been, we spent the last hour getting advice for everyone in the Palisades about how they should handle these claims we're doing. So Jen, thank you for being here.
Thank you for having me. I can go a little bit more in terms of my background and why I'm here. So I moved to Los Angeles from New York City about 2 years ago. We bought a home in Sunset Mesa, which is right near the Palisades. Unfortunately, our home burned down in the Palisades Fire. 70% of our neighborhood burned down. And my background's in insurance. That's what I've worked in for the past 15 years. So happy to talk about how we got here in terms of the insurance market in LA and California generally, and how we should evolve going forward, because this is, the market here was already in crisis, and now we are in super crisis.
Yeah, and just for context too, we're both in this unfortunate club of my house also burning down. And so one of the first things I did, actually, I spoke to Francois, your co-founder, and basically he was just like, this is totally messed up and totally unnecessary. So I think that would be really a good place to start of how did we get here? How long ago did this start? I've heard things about, there was in the 60s, the FAIR Plan was sort of the first step of this, but could you just give everyone just kind of a base foundation?
Yeah, so in LA and California generally, the insurance market here has been in a bit of a crisis. So it probably better described as a death spiral. So I think a lot of homeowners here have seen that a lot of insurance companies have pulled out. As of recently, I think 7 of the 12 largest home insurance companies that are active in California have either stopped renewing policies or just completely stopped writing business. And so what happens in that situation is the California FAIR Plan which was formed, back in the 60s, as the insurance company of last resort, meaning if you can't get any other home insurance coverage, you can opt into the California Fair Plan. The California Fair Plan only covers wildfire risks, right? And so from what I've seen, most of the people who were affected by the Palisades Fire, myself included, you as well, were on the California Fair Plan because we could not get any other private insurance available. Other carriers stopped writing. And we could talk about what's happened, why that's the case. I'm a licensed insurance agent. I had to be as part of our business. We ran a national brokerage for life, home, and auto insurance, so been deeply involved in this for a long time. And what happened in the California insurance market was really avoidable, right? We didn't have to get here. And I think there's been a lot of confusion about what's gone on, a lot of finger pointing at the insurance companies, and I think that's probably pointing the fingers in the wrong place. So if we take a look at how we got to where we're at in the California insurance market, there's really three areas, three factors that have affected us. The first is around inflation, right? We've all seen inflation. Inflation affects insurance companies, right? Because they are insuring the value of your home, your car. They are insuring the cost of labor and materials to make repairs there. So any underlying inflation of those assets is going to drive up insurance prices, right? So as an example, I think from 2019 to now, the average home price in America has increased by 35%, right? So that's obviously going to drive up the cost of home insurance. The other big factor, and this will get a bit wonky here because I think we have to get a bit wonky to understand the regulatory environment where we go from here, reinsurance. So insurance companies have their own insurance, and that's called reinsurance. So reinsurance is basically the pool of insurance behind insurance companies that allows them to aggregate their risk into an even bigger pool, right? Insurance works because of the law of large numbers, right? You need a whole bunch of risk. You need a whole bunch of diversified risk in order to make this work. I, as an insurance company, can't predict with accuracy what's going to happen to your specific property, right? What I can predict is if I have a pool of 10,000 properties, right, how many of them will be, damaged or destroyed in the next year, right? So that's how insurance works. So reinsurance is important to be able to spread the risk, which then allows insurance companies to continue to write more business and cover homes, right? So reinsurance costs have spiked dramatically as well. From 2018 to 2023, the cost of reinsurance for home insurance companies doubled.
Is that throughout the country, or is that like a California thing?
Throughout the country.
Okay.
Yeah. So we'll talk about California specifically because I think it's been worsened by regulatory decisions here and the regulatory environment here, but inflation, the cost of reinsurance, has increased throughout the country, right? So that's one piece, is inflation has been a big driver of where we are. The second area is around natural disaster risk, right? We just lived through one. It's going to be one of the largest home fires, I think, in modern history. But natural disasters across the U.S. have increased dramatically in terms of like frequency and severity. So just to give people a sense of how bad this has gotten, right? So the annual frequency of catastrophic disasters, meaning that the disaster has caused more than $1 billion of damage, basically tripled, right, in the last 20 years. So from 2000 to 2009, there were an average of 7 catastrophic events per year. From 2020 till now, there were 22 events per year, right? So tripling in frequency, which means that the losses that insurance companies have endured have doubled to tripled over that same time, right? So you've got this whole bucket of like climate risk, natural disaster risk. Believe what you want around the climate science, but the facts are the facts in terms of like there have been more frequent $1 billion plus natural disasters.
Is there like, this is probably a whole separate conversation, but like, is there sort of government, malfeasance or apathy that has led to that as well? Like, is it the climate issue, or is it that a lot of these cities are not capable to handle these storms over the last few years?
I think it's probably both, right? So I think, there's nothing you can do to prevent a hurricane, for example. But where government can step in is around the response, is around prevention, right, which is around building codes. So a lot of the losses can be mitigated, avoided. I think fires are a different thing where there's even more government response that could have prevented and certainly, avoided a lot of the loss that we saw in the Palisades and Eaton fires. Yeah.
And I think, you mentioned it, but over the last few years, and certainly one of the big stories of the most recent fire is that a lot of homeowners were dropped from their policies over the last few years. And I think a lot of people, myself included, wonder, typically in other inflationary environments, the cost of goods gets passed to the consumer, and the consumer has the decision whether they want to pay for that cost or not. That doesn't seem to be the case here. And so can you explain why hasn't that been even an option for homeowners?
It's a great question, and it's a good segue to the third factor of what's created this, and that's around the California regulatory environment. So back in 1988, California passed Proposition 103, right? So this was almost 40 years ago. So Prop 103 has really driven a lot of what we've seen in terms of the insurance market here in California. So what Prop 103 did was two main things. The first was around data and models allowed for insurance companies, right? So we're getting in the weeds here, but it's important to understand. So in every other state in America, California being the outlier, home insurance companies are allowed to use forward-looking data and models to project risk, and then you have to price that, right? Which then you can pass on to consumers, right? So to accurately price the risk, which is like 101 for selling a good or a service. What Prop 103 did was say you can't use forward-looking data and models.
What?
You can't project. You can only look backwards, right? And use historical data. And anybody who understands, risk and insurance, we're in a dynamic environment where that's changing.
What was the logic?
I think this was almost 40 years ago. I think it was probably around they didn't trust the forward-looking projections and models, and that it wasn't friendly to consumers, and so backward-looking was the more reliable thing. I don't know. I couldn't unearth the public policy behind that, but that was one big thing, right? So I just mentioned that natural disasters have tripled in frequency over the last 20 years. So, that backward-looking data is useless in terms of pricing right now what it costs to insure your home or my home in LA.
And the insurance companies obviously have these models. They run the models and they're like, this is crazy.
In every other state, yes.
How has this not changed in 40 years? And you ran an insurtech business that is, I'm sure, looking at forward-looking data.
Of course.
How has this not been revisited for the last 40 years?
So, to jump ahead, the insurance commissioner here in California actually did change that, just literally at the end of last year.
Okay.
Oh, wow.
After 40, but we can all argue it was basically a little too late for those of us who.
Was that a reaction to us getting dropped? Like when I got.
Yeah, it was a reaction to basically the death spiral that the insurance market has entered into California, right? So if you look at the California Fair Plan, so the insurer of last resort that most of us are on, they tripled in size from liabilities, from 150 billion to 450 billion. So, they're no longer the insurer of last resort. They're a big insurance provider. So, so that was one piece around the data and the models used. The second piece, again, California was the only outlier here across all 50 states, is around reinsurance. So one of the drivers of cost for a home insurance provider is the cost of reinsurance, right? Because most of them are going to use reinsurance to help them, manage risk, manage cost, right? In every other state, insurance companies are allowed to pass along the cost of that reinsurance in the price of the policy that they sell to consumers.
Makes sense.
Right?
Yep.
California, they were not.
Okay.
So California,
They made a law, I guess.
Prop 103, they weren't allowed to incorporate the cost of reinsurance into their pricing, right? So that's like if you ran a bakery and you were not allowed to factor in the cost of eggs and flour into the baked goods that you sold, right? And so that was hugely important because reinsurance has been the main strategy that most insurance companies have used to be able to write business, right? So I'd be more inclined to write in a fire risk prone area if I know that I can get reinsurance for it and like spread that risk, right? And I'm not overly concentrated in a high risk flood zone or fire zone, right? Reinsurance is critically important. As I mentioned, the cost of reinsurance has doubled in the last few years. So if I'm an insurance company, my cost of reinsurance has doubled. I'm not allowed to pass on those costs, to policyholders in California. What am I going to do? I'm going to stop writing business. And as soon as policyholders come up for renewal, I'm going to non-renew, which is what happened to a lot of people in the Palisades and on the west side of LA. I can't profitably write business. And I think that's another misconception that, angry policyholders, rightfully so, right? We're all angry, don't understand is home insurance is not profitable. It's kind of a dog of a business. So if you look at home insurance as a business line, insurance companies track what's called the combined ratio. So the combined ratio is your underwriting, so your loss, your claims and claims expenses, and then all of your operating expenses, right? 100% combined ratio means that every dollar that you collect in premiums goes out in terms of expenses, meaning you're break even. So if you're below 100%, you're actually running underwriting profit. If you're over 100%, like you're losing money on every dollar of premium that you write. The combined ratio for home insurance as a business line is 110%. Okay. Meaning that for every dollar of premium that a carrier collects, they're paying out $1.10 in expenses. Right?
And that's exacerbated in California.
Yes.
So it's already a bad business.
It's already a bad business. And just to double click on that, right? So I collect $1 premium, I'm paying $1.10 of expenses. Most of that, so of that $1.10, 85 cents of that is on claims and claims expenses, right? So it's not like, these insurance companies are running like, big fat overhead lines. Like most of that is to pay for claims and claims expenses, right? And so if you can't profitably write business and if you can't accurately price, right, the policies that you're selling to homeowners, you're going to stop writing business, right? Like these are for-profit companies in most cases, and you have to be able to profitably write business.
And do they is the net effect that there is a cap to how much? Is there an explicit cap to how much they can charge people in California, or it's just a function of you can't charge for the reinsurance and you can't price it accurately?
It's a function of that, okay. Right? And because of the processes in place from Prop 103, my understanding, it takes longer in California than most other states to get any rate approvals done. So if a carrier wants to increase rates, it just takes longer here. And part of that is because Prop 103 allows for consumer organizations to intervene in the process, which then kind of lengthens the amount of time, right? So if I've got a bunch of renewals coming up, I want to be able to reprice them accurately, but if it takes too long to get those rate approvals done, I'm just going to not write the business, right? Because the rates that I have now just don't reflect the risk and the cost of insuring that risk.
And does the government in California, as policies, we talked about this a lot, as policies are getting dropped or not renewed, clearly the insurance companies know these are high risk areas, right? Because there are other areas in the city that you can get insurance or different types of home insurance and not get them in other areas. And so is the California government in this case talking to insurance companies to understand what are those high risk areas? Or are they totally operating independently, in which case leads to something like this?
Yeah, the insurance commissioner, works closely with insurance companies, right? So everybody knows kind of where are the high risk areas, right? That, costs of insurance are increasing. But insurance companies' hands have been tied in LA and California from accurately pricing and passing on that to consumers. The reality is home insurance is going to be expensive in California and here, right? We can talk in a bit about how we might improve that. But choice is important, right? So if I had a choice between all these different private insurance companies, and it might be, expensive versus California Fair Plan, that's better for all of us, right? There was an interview with Evan Greenberg, who's the CEO of Chubb, a few months ago and is in the Wall Street Journal. And what he said is, I haven't told you to build in a wildfire risk prone area. But I would gladly insure you if I could charge the right price.
Yeah. Well, and that's where, like, I obviously, just given that my house burned down, I've been really frustrated.
Yeah.
And like State Farm, when they dropped me, they actually were really communicative, and like I don't think of them as the bad guy. And actually, Fairplane's been pretty good, relatively speaking. But the fact that like the Palisades knew, right? Like our supervisor or council person, like knew that we were all dropped and didn't say, okay, great, like we have to overinvest basically tax dollars to harden this. Like, is there a connection between like the insurance market and these officials, or is your sense that these things just totally operate separately?
I think they operate relatively separately, but they shouldn't, right? So what an insurance company will look at is a number of things. One is the regulatory environment for like, how can I price this, right? And like, am I allowed to accurately like value and price the risk, right? Which we just talked about.
Yeah.
So for almost 40 years, they weren't, right? They weren't allowed to use the right data. They weren't allowed to use forward-looking projections. They weren't allowed to factor in the cost of reinsurance and build that into the price charged to policyholders, right? So that's one thing. The other thing they'll look at is the actual risk on the ground, right? So, they'll send out inspectors, they've got drone footage, they'll look at, what kind of perimeter defense do we have, right? How dense is this populated? Where are the, closest fire stations? What are the water supplies here? So they'll also look at the risk on the ground for communities and homes. And if that risk, right, is unmitigated,
Yeah. It's crazy because it's like
that's
proof.
a piece of it too.
Yeah, it's like I feel like we're being. I can't use this. It's like we're being gaslit. It's weird in context, but like it's sort of proof to some extent that this like was not like safe for us. Like I feel like I to some extent I just feel like stupid because I made the assumption that when they dropped it that they went around and like did test these things, and it's like it sounds like that maybe that wasn't the case.
I don't think so. I think the decision by State Farm and all the other private admitted carriers who decided to non-renew big parts of their business here in LA just knew that the risk is high. I'm not allowed to price and evaluate that risk accurately, right? Which means that my shareholders are going to scream at me because I'm, losing 10 cents for every dollar that I write of premium. Like, it doesn't make any business sense, right? And at the end of the day, it's a business. And we should have choice as consumers and policyholders, right? I paid a lot for a fair plan to get the max limits, and I was fine. Like, that was the only option that I had. I was fine with that. I knew there was a risk living where I lived on the west side of LA, and I knew there was a risk because no other insurance company was writing for our neighborhood.
Well, and that was the part that was so shocking too when we got dropped and put on the fair plan. I mean, I'm now in retrospect happy that I did it, but at the time I was like, this is insane because I think it was a 400% increase, and like, but it just shows it was just, to your point, I guess, like artificially low this whole time.
And it's interesting though how you've just described that the insurance companies are almost like an auditor for the government. I mean, the reservoirs were empty. I mean, like, you've talked about how you didn't see fire trucks come to the house. Like, obviously not the fireman's fault, but like, there are all of these things that you're saying go into the policy decisioning and the pricing. But if the policies aren't even active, who's checking all of these things that we just assume we take for granted?
Yeah, I think we had all assumed, and I'll raise my hand as well, we have a social contract with the government, right? And I think we had all believed that, and I know my husband and I did, when we drove away and evacuated at noon on January 7th, it didn't even occur to us to stay behind with a garden hose, right? We were like, great, the fire trucks will be coming. I can see smoke coming up on the mountain. And no fire trucks came. And I think our street was one of the first to burn down in the Palisades Fire, and not a single fire truck was seen on our Ring cameras or our neighbors' cameras. And so, on January 7th and 8th, I think that social contract was broken, and it's been a wake-up call for me personally, and I know for everybody else I've spoken to, that all of these factors that weren't just, factors 6 months ago or a year ago. This has all been kind of brewing in this state and in this city, and it's created, what's likely to be the biggest natural disaster in terms of losses, financial losses and damages in like modern U.S. history.
It's crazy. And before we get into like the solution, one other question just about the fare ban, because I've had a couple friends of mine who are like, this is also bullshit because like taxpayers are effectively going to have to subsidize like us, like, which I understand the frustration there, and like now again we paid 4x, so I feel like we're not part of that to some extent maybe, but is the fare plan insolvent at this point? Or like how will it possibly cover all this stuff?
So the fare plan, the way the fare plan works, it is funded by the private insurance companies who do business here. So it's not funded by tax dollars per se. It is actually just a pool of private insurance company money you have to contribute if you want to write normal business in the state of California, right? So the fare plan keeps reserves on hand for losses. They also have, I think I read, a few $1 billion in reinsurance, right? Once that's tapped out, then they can levy an assessment on the private insurance companies that are doing business in California to fund the rest of the liabilities. The insurance commissioner, I believe, just passed a law that says if that assessment is levied, and it's going to be, right? The estimates that I've seen are like 30 to 40 billion of insured losses in these fires in LA. If that assessment happens, the insurance companies are allowed to pass that assessment on to their other policyholders, right? So that's what's going to happen.
Crazy. So
but this is what happens in all disasters, right? Like, if a hurricane happens in Florida, there's going to be federal impacts of that. So, I mean, this is generally what happens. Are insurance rates going to go up in California? Likely. Should they be higher based on all the things that we just talked about? I mean, yes, right? Like, and we all have to make a decision, right? Risk has changed. Things are more expensive. Do we want to keep living here and pay the cost to insure ourselves to live here, or do we want to move to, I don't know, Nebraska or Michigan or something? Yeah.
But it will effectively like be subsidized, the wrong word, but like everyone in this entire state is going to have to pay for this in one way. Like if you were in San Diego, like LA failed you, effectively.
Yes. Like if you kind of play the chain out enough, I think that's going to happen. They haven't, as far as I know, levied that assessment yet on the insurance companies because they're still working through the reserves and the reinsurance for fare plan. But it's almost guaranteed that it's going to happen just given the scale of what happened here.
Crazy.
So I guess given all of that, and looking ahead, like where do we go? Like as we even try to like make sense of all this, like where do we go from here?
Yeah. So last month, right? Finally, after, since 1988 is when that proposition passed. The insurance commissioner has allowed carriers to price in the cost of reinsurance. But I think he's capped that. So there's some change, right? And also, right, has allowed them to use forward-looking projections and data and updated risk models to price, right? Like, way to go, California! Join the rest of the country in that. So that changed like literally at the end of last year is when those changes went into effect. So, and I don't want to understate the importance of insurance regulations in a state for a well-functioning insurance market. If you look at California and Florida, right, those two states run similar paths in terms of like an insurance market death spiral, right? Florida similarly, right, with hurricanes and floods, they also faced a lot of insurance companies pulling out of the state, right, non-renewing policyholders. And their insurer of last resort, so their equivalent of the FAIR Plan's coverage is called the Citizens Insurance Corp. Citizens became, basically one of the biggest insurance companies in the state because nobody else could get private insurance in Florida. And so that whole market in Florida was in danger of collapsing. The governor, Ron DeSantis, came in and he championed some reforms that were at the heart of the issues in the Florida insurance market, and it stabilized the market, right? So what you've seen now in Florida, which I hope we can see in California, so 9 insurance companies have since entered the market in Florida.
After leaving.
Yeah. Or new ones, just period. So new ones have come in and entered the market saying, I can write business here and I feel good about writing business here. 60% of the top 10 carriers who were active in Florida have actually expanded their business. So like gone into new markets in Florida, increased the number of policyholders that they were insuring. And 40% of the insurance companies in Florida have actually filed for rate decreases, meaning they're lowering the prices of coverage that they're offering. So like, I think we kind of, our eyes gloss over when we talk about the regulatory environment, but it makes a huge difference. And so if you just look at California and Florida as a case study of two states that were on the same path, and Florida, zigged when California zagged, like it's made a big difference in that market. So I think
how long did that take, like that transition?
a few years, right? DeSantis hasn't been in office for that long.
It's
right?
This is like a totally.
It's like 3 or 4 years,
self-inflicted wound.
Yeah, absolutely. Like this is, own goal, self-inflicted wound that could have and should have been fixed ages ago, right? And again, California was the outlier here on those pieces. And so the other piece, in terms of where do we go from here and how do we improve, at least the insurance market, but as well as like the protection of like homeowners and residents here, is around how we deal with wildfire risk and how we like fund and staff public services, right, that are supposed to protect us when disasters happen. And so I think that's a huge piece of it, right? You've talked about it on the news. There were no fire trucks. Fire hydrants were empty. The reservoir was empty. We didn't see any fire trucks in our neighborhood, and we have video footage, right, from our Ring cameras. And we watched as, a little bush in our backyard caught on fire, and it stayed that way for a bit, and then it spread a little bit, and that flame became bigger, and then eventually, hours later, it became the inferno that we saw in the news. But it could have been prevented.
Yeah, two sort of anecdotes along those lines, which we'll get back to insurance, but it is, I think our house, it burned down like late Tuesday night, so like hours after yours, which is ridiculous, and there was no fire truck.
Right.
But then I heard a story at a friend who on Thursday, his house burned down because it was
in the Palisades.
In the Palisades, yep. The house, they thought it was totally fine, and then it was just a small fire that there was no one to put it out, and it went just from house to house, like crawled down the street, and the house was burned down. And so but I guess what you're describing is if they do allow the insurance companies to use models, and those models are sophisticated, that is like an opportunity maybe for the insurance companies to let all of us know, like give us an assessment of like, listen, we've seen that like the reservoir is empty. This is why we're going to increase this, right? Like we've done pressure tests on the fire hydrants. There's not some. Like this is how many fire trucks we've seen like in the yard. It's like, could it get to that level of transparency?
That's a good question. I don't know that the insurance companies will necessarily do that, right? And say specifically, like, this is why we're not renewing you, or this is why we're not writing coverage in your area. But I think all of our eyes are open now, and it's on us to demand that of, like, our public officials who, failed
we should
us.
get that report. Like, why didn't we have, why can't I go look online?
Right,
like,
exactly. Right.
I mean, is there a precedent in the U.S. of any states or kind of any jurisdictions providing that level of transparency, saying we've done an assessment and we're red, yellow, green?
I'm sure there are.
Yeah.
I don't know off the top of my head.
Sure.
And just speaking to other people in the industry, so many states and so many communities do such a better proactive job of managing fire risk,
Really?
right? Controlled burns, fire breaks. My sister lives on the East Coast. She and her husband are moving back to West Virginia, where he's from and where we went to high school. And, she was telling me about all the, the fire breaks, the control burns, everything that they do elsewhere. And I've had anecdotal conversations with people who are involved in, like, the Lahaina fires. And, we collectively know what to do to prevent and mitigate wildfire risk and to harden homes and to, create defensible communities. But government bureaucracy just does this. And as one example I was telling you about before we got on the podcast, we had an issue with an illegal encampment of RVs along PCH, Pacific Coast Highway, that created a fire risk for us because they would, have open fires and grill outside of their RVs at the bottom of our bluff, which is covered with vegetation, right, that could easily catch fire. For 6 months, our HOA and the residents in our neighborhood were trying to get government to take action and tow these RVs, right? They were not supposed to be there. They were illegally encamped along the side of the highway. And so contacted the sheriff's office and our county supervisor and Caltrans and everybody that we could think of, right, who had some jurisdiction along that shoulder of PCH, and nothing ever happened. And in fact, bringing it back to insurance, one of our neighbors whose home was at the top of the bluff overlooking PCH had private insurance, and so wasn't yet on the fair plan, and was up for renewal, and the insurance company sent out an inspector to his property, looked over the edge, and saw some RV guy cooking like on an open air fire, like directly down the bluff, and dropped him. Yeah. And so, but that's an example of like, you know, this government bureaucracy that was by design in LA, right? In California, just kind of renders, even when citizens are like aware of the risk and are trying to do something, they're just blocked and have been blocked from doing anything about it.
And I guess like, going forward to like, it seems like at least the math is pretty straightforward to make the insurance market rational. And at this point, at least now, the city and state are probably incentivized to fix that, I would assume. Is there like anything else that like we could all do? Like I assume anyone who's listening to this probably is affected by the fire. So like, what is it like that we should try to get people to do?
So I think keep the pressure on and our public officials to change this, you know, maybe run for office. So all these like skilled operators from the private sector who've now been, you know, slapped in the face by this, like these are the people that we need, right?
Maybe someone with insurance experience, like yourself,
or maybe somebody who's like run a business before, guys. But the problem is like those of us who, you know, have done the paths we've done, are typically high agency, high bias for action individuals, and that's what, you know, you can't really do that in government, at least until now in California, right? So that's the big piece, is holding, you know, government institutions accountable for the failures that happened this month and for all the failures before that that led to what happened this month. That's one piece of it. Second, and we've seen a lot of this now, and we're doing it for our community, is self-organizing, right, to fix these ourselves. So like we've got an active HOA. We are now working with outside experts to update, you know, the CCNRs, so the codes, covenants, and restrictions, right, to enforce some, you know, landscaping, vegetation best practices, right, to have a review of the building materials and all of those things to make the individual homes and lots defensible. And then looking at, you know, what are our options for, you know, self-funding, right? Some fire risk mitigation measures, maybe looking at private fire service for our neighborhood since we fell through the cracks and nothing showed up, right? So I think the self-organizing piece might be a viable path forward. And then because even if you fix the insurance market, if we're not hardened and protected against the next one, it's all kind of moot, right? So that's one piece of it too. Yeah,
because you know, this is not like, and we are rebuilding, like we're staying, but like the thing I'm worried about now is like an earthquake, where it's like it's going to be the same. It's going to be the same response system unless it's not.
Yeah.
You know, so that's really I mean, as you guys like, can we have you? Hopefully, we're not doing this for like another year and they fixed it, but it would be interesting to have you come back and explain kind of how you guys are doing the Sunset Mesa, because before this we were just talking about like you guys do have like a vision for like how this is like can be functioning, and your neighborhood may have the opportunity to actually do that, right? Because it's unincorporated, so like it could be like a testing ground to some extent.
That's our vision. Like, could we make this a model community for California for how you do this right going forward? I mean, the last estimate I saw, 70% of the homes in our 500 home neighborhood were wiped out, like completely destroyed. And it's been around as a planned community from the 60s. So many of our neighbors, I know the case in the Palisades, right, we're original owners, right? So older individuals in their 70s, 80s, and it's just devastating to see what's happened. But I think there's some energy, decent amount of energy now that we're organizing to, you know, build back better, right? So we'll see, you know, if we can get the right government support and not get blocked by bureaucracy, but that's the vision. And while we're here, I also want to make a public service announcement to everybody. Please check your insurance coverage, because we've been helping friends, neighbors with that. I think a lot of people realized when it was too late that they didn't have enough insurance coverage to rebuild in the case of a total loss, didn't understand how the coverages work. Please take a few minutes to double check your insurance coverage and make sure that you're adequately covered before it's too late. That's been probably a heartbreaking piece of the work that we've done over the last few weeks, is seeing a number of our friends and neighbors who didn't have enough coverage and now trying to navigate through that, especially in this scenario where the prices are going to skyrocket because of a surge in demand to rebuild and materials and labor, et cetera, et cetera. Most the stats that I've seen, like not just for California but America, 2/3 of homes are underinsured, and about 1 in 10 homes are totally uninsured. So that is a PSA of what we can do as individuals just to make sure that worst case scenario, we're covered. And I know a lot of people have said like, oh my gosh, it's so expensive. Your home is typically the biggest asset you have.
Yeah.
So it costs what it costs, right? And insurance is not the place where, you're going to complain about it being too expensive. You can shop around if you're in a market where there are multiple insurance companies, but just make sure it's adequately covered, because you don't want to find yourself in the worst case scenario and facing, some real financial hardship.
If anyone wants to hit you up for advice on that, can they? And if so, how can they reach you?
Sure. You can find me on LinkedIn. I'm no longer affiliated with Policy Genius. I stepped down at the end of last year, but I still kept my insurance license. So you can ping me. But your insurance agent or broker should also be able to explain that to you, especially now. You probably can't, if you're in LA and you weren't hit, you probably can't change your insurance coverage now. There's a moratorium on that.
Yeah.
You probably have to wait till your renewal to do that, but educate yourself and get smart on it now, please.
Quick aside, actually, it's kind of funny along those lines.
Yeah.
I called my insurance broker yesterday about my non-fire insurance. I was like, I probably should have less coverage. My property is like rubble now. Mm-hmm. And she's like, we can't change the policy right now.
Yeah.
I was like,
okay. No changes to be made for the time being. So yeah.
Ridiculous. Well, thank you for doing this. I'm so sad that we have to do it on sort of because of our houses burning down, which is totally surreal. But this is super helpful to me and hopefully helpful to other people. And good luck with everything with Sunset Mesa. I can't wait to see what it looks like.
Thank you guys too. I appreciate you having me on, and hopefully we can all use this to improve, because this is still probably the most beautiful place in America to live.
And can't get, knock on wood, can't get that much worse at this point.
Let's hope not.
Yeah. All right. Well, thank you.
Thank you guys.
All right.